Welcome back to another weekly analysis video. This analysis is for the week of February 22nd, 2026. We'll start off with a review and then move into the analysis for next week. So we had a holiday this week. It was, I believe, President's Day on Monday, February 16th. So the market actually closed early on that day. And in the beginning of the week, coming in on Tuesday the 17th, we had some initial downside movement. And if you recall in the analysis, I was looking for bearish prices, seeing if we could reach back down into here, taking out this low and this low here, reaching into 24,057. We repelled away from the stop run area relative to 24,057 and have come back into the middle here. Now, if you recall, I had said that I want to see price ideally stay below the middle of this particular range in here, and it has done so thus far. So going into next week, I'm going to have to engage to see how we react where we're at now, and if we move away from that, or if we start moving through the middle portion of this range and then wanting to seek higher prices. Ideally, it comes off from the high here and repels away quickly, but it didn't do that. It's consolidated. And this can happen since we are in this range here. Okay, so not the most ideal scenario that I wanted to see, but it can still happen, and it's something that you have to weigh out. With that being said, even though we had more or less a consolidated week, initial bearishness in the beginning of the week, there are still setups here. So with that being said, let's go ahead and move on into the hourly chart. Okay, and on to the hourly chart here. Draw your attention into this gap right in here. Again, recall how I said that I did not want to see price come above the middle of this particular range in here, and that it should leave some of this gap open. Some of this gap is still open, however, it's coming back up into it for a second time. Ideally, it only goes into it once and then repels away. Initially, we had some little bit of downside movement, but now we're back into it. So I'm not exactly liking what I'm seeing right now. So again, it may come back up, tap it once more, and then go lower. If we start trading through the middle, through this top portion of this range, it will want to seek these highs in here most likely. And then that would void the idea for the moment of bearish prices. But we'll talk more about that as we move into the analysis for next week. But the point that I want to make here is that some of this gap should remain open, and that it should stay ideally below the middle of this range in here. It can wick through it. It can wick through it and then run away lower, but ideally from where it's at now, it shouldn't go much higher if it's going to be bearish. Alright, and on to our 15-minute chart here. Not liking this price action really. It just doesn't seem like it wants to get anywhere quickly. What I don't like about this is that we have and are now coming back up into this area for a second time. So it'll be interesting to see how we trade in the beginning of the week. So for a recap of what happened last week, we did not get the bearishness that I was expecting. Initially we got it in the beginning of the week, but we had a consolidated week. And sometimes my analysis doesn't pan out accordingly. We had a consolidated week. So when your analysis doesn't pan out accordingly, you have to make adjustments for that, because while it seems difficult now to reverse your bias and make adjustments, over time it actually becomes a lot easier. And most times, if you see things not working out the way you wanted to initially, if you simply just reverse the idea or take a step back, you'll be able to see what you weren't able to see before, and then make those adjustments later in the week and perhaps recuperate a loss, or even take your first trade after initially seeing that your analysis isn't going to pan out the way it was, taking that first trade later in the week and end up being in a profitable week. Okay, instead of maybe having a loss in the beginning of the week and then having to recoup that loss. Okay, so I always like to see how things pan out in the beginning of the week. And again, while we did see bearishness initially in the beginning of the week, it turned into a more or less consolidated week going into the end of the week. So with that being said, let's go ahead and now discuss the weekly analysis for the week of February 22nd, 2026. And back on our daily chart here. So right now we're in a consolidation within this range in here. So going into the beginning of the week, simply just going to see how we engage the middle of this range here, which is realistically the middle of this overall range in here. So if we're going to continue this bearish trend that we have started, we need to remain below this area in here and then start to get away from that as we are tapping into this area for a second time, and that doesn't bode well for bearishness, and so I want to see it get away from that. If we're able to get away from it, we will see these lows taken out and move into 24,057. But for now, I have to engage how we react and interact again with the middle of this range. Because if we start moving above it and into here, it's going to want to take out these highs and target 25,515 and just play around in this range. So that is something I'm weighing out. So with that being said, let's go ahead and move on into the hourly chart. And into our hourly chart here, it's just another recap of what we saw in the weekly review. Same exact thing. I'm just going to point your attention to this gap because there's really not much to discuss as far as what I'm looking for. It's essentially the same thing as last week, and a lot of times, this becomes very boring. I mean, it's not exactly the most fun profession to be in. It's very boring. It's very mundane, and it becomes very routine. And so, you want your trading to be like that. I mean, when you go to a job, for example, you don't exactly want to be there, but you're getting paid for your time. Okay? And it's boring. It's the same thing over and over again. Well, trading is no different. You have a lot more freedom, however, with trading. And going into February of this year, as far as speaking of freedom is concerned, I'm going to have a little bit more time freed up. So I'm going to be producing more videos. I'm going to try to aim for at least one more video per week. Now, as far as these weekly analysis videos are concerned, if I'm going to do teaching content and explore concepts and be able to present that publicly, I don't know if I want to do the weekly analysis anymore. I want to do one or the other. So I haven't decided yet what I'm going to do with the weekly analysis videos. But as far as a teaching video is concerned, I'm going to try to aim for one per week alongside the weekly analysis video. But we'll see what the future holds. I've got some ideas in the making. So with that being said, let's go ahead and move on to the 15-minute chart. And the 15-minute chart here shows a more refined view compared to that of the hourly chart. Again, this is the area that we're going to be monitoring going in the beginning of the week, wanting it to stay below the middle of this range, and it can wick through it. Matter of fact, now we have equal highs in play. Let's point that out. Ideally, it runs those equal highs, runs through them, and then repels away. But, looking at the structure of this, I'm not really a big fan because came into the stop run here, repelled away, came in back into this area, creating a higher low. Don't like that structure, rating these lows. So again, it's just something I need to weigh out. I have to see how we interact and behave in this area in here, and then I'm able to go ahead and make a decision. So I'm waiting for more information. So with that being said, that's going to conclude the weekly analysis for the week of February 22nd, 2026. As always, take care, and God bless.